It's happening again. Just like in the past, America is facing another economic bubble burst. But this time, it's not the stock market or the housing market. No, it's the car market. It may sound absurd, but it's the reality we're living in right now. Bloomberg has already warned us that the dominoes are falling, and it's only a matter of time before the consequences become widespread. A few weeks ago, we were already discussing the brewing storm in the US auto market. The data showed that more Americans today are struggling to pay their car loans than during the Great Recession. The high interest rates in the past 15 years made auto loans too expensive for many Americans. It's no surprise that in January, the average loan rate for new cars reached its highest in 13 years, with experts predicting it to reach its highest this century. But despite all these alarming signs, there was still something missing. Why haven't we seen a spike in defaults yet? That question was answered when one of the most prominent subprime auto lenders in the US, American Car Center, suddenly closed all 50 of its dealerships across 10 states. The closure came just a day after the company sent a message to its staff, saying they were working to improve liquidity and continue operations. They hoped to sell $222 million in bonds to secure funding, but that plan fell through. The sudden closure of American Car Center is just the tip of the iceberg. It's a clear sign that the auto market bubble is about to burst, and when it does, the impact will be devastating. It's not just the lenders and dealerships that will suffer, but also the millions of Americans who are already struggling to make their car payments. This is not just an economic problem, it's a human problem. The uncertainty and fear that this situation brings are real, and we need to face it together as a society. We must find ways to support those who are most vulnerable and ensure that we don't repeat the same mistakes of the past. The news hit hard for Samantha Mitchell, who had leased a used Volkswagen Passat from American Car Center, the subprime auto lender and used car retailer that abruptly shut down last week. As she scrolled through social media, searching for answers, she found only confusion and frustration. Customers like her were left in the dark, with no local point of contact to turn to, and no reassurance that their car payments would continue to be processed. But the closure of American Car Center wasn't just affecting its customers. The sudden loss of jobs for its 2,300 employees was a devastating blow, especially for those who found out only at the end of their shift that they were out of work. My heart goes out in so much empathy to the employees that did not know until the end of their shift that they were out of a job, said a former employee who wished to remain anonymous. That was totally unprofessional. The collapse of American Car Center was just the tip of the iceberg for the subprime auto loan market, which is rapidly deteriorating. According to Cox Automotive, millions of people are starting to fall behind on their car payments, and the distress cycle is accelerating. In the last month, 7.11% of subprime loans were severely delinquent, the highest monthly figure since data tracking began in 2006. The severity of the delinquencies means that borrowers are more than 90 days behind on payments. This poses a threat not just to the auto loan industry, but to the broader economy as well. The situation is made worse by the fact that many subprime auto lenders, like American Car Center, target consumers regardless of their credit history. These lenders make up about 11% of the overall U.S. auto market, with about $19.6 billion in subprime auto loans expected to be written in the U.S. in 2023. The dominoes are already starting to fall, and the distress in the subprime auto loan market could be a leading indicator of broader auto loan problems. The abrupt closure of American Car Center has left many questions unanswered. Borrowers are unsure of what will happen to their car payments, and former employees are left without jobs. The distress in the subprime auto loan market poses a threat to the overall economy, And it remains to be seen how many more subprime lenders will follow in the footsteps of American Car Center. 2022 was a year of struggle for the auto industry. Manufacturers were unable to keep up with consumer demand due to supply chain issues and a shortage of semiconductor chips. Coupled with high interest rates and low inventory, car sales tumbled to the lowest total since 2011. As the numbers show, only 13.7 million vehicles were sold in 2022, a drop of 8% from 2021. The parent companies of Chrysler, Dodge, Jeep, Honda, Nissan, and Toyota all experienced significant declines in U.S. sales. But what's causing this downturn in the auto industry? The latest University of Michigan survey found that high prices were cited as the primary factor deterring consumers from purchasing a vehicle in the current environment. With rising interest rates, inflation, and an ongoing recession, prices have become out of reach for many Americans, limiting the demand for vehicles. As I sit in my car, I can't help but feel overwhelmed by the reality of the situation. It's not just about the numbers or the statistics. It's about the people whose lives are being impacted by this downturn. I think about the families who need a car to commute to work or take their children to school. I think about the individuals who rely on their vehicle to earn a living. The effects of this auto industry bubble go beyond the surface-level data. It's disheartening to think that cars, something that was once considered a symbol of freedom and independence, have now become a financial burden for many. As Nicole Gellner explained, cars are not long-term appreciating assets but wasting assets. They steadily wear out with use, and their value depreciates over time. Yet, Americans have borrowed more money than ever before to purchase these vehicles, with the amount of car debt doubling in barely a decade. I can't help but wonder what the future holds for the auto industry and those who depend on it. Will there be a shift in the way we view cars? Will we begin to prioritize sustainability over luxury? Only time will tell. Until then, I'll continue to drive my car and appreciate the freedom it provides me, but with a new sense of awareness and responsibility. I never imagined the auto loan industry could be such a mess. As I sat down to review the data, I felt a wave of sadness and frustration wash over me. It was like looking at a Wild West movie, where everyone was out for themselves and there was no law and order. The numbers were staggering. Interest rates had gone up from 7.4% to 9% in a year. Monthly payments had skyrocketed from $506 to $600. And to make matters worse, 7-year loans were becoming more popular, but not everyone could handle the higher payments and down payments. It was no wonder car sales and car prices were crashing. The truth was, the auto loan industry had been a bad show for years. Long terms, high payments, and predatory lending tactics had dominated the market, leaving millions of borrowers in debt they couldn't afford. And now, a new study from Consumer Reports showed that things were even worse than anyone could have imagined. Credit scores no longer dictated loan terms, and borrowers from every credit score category were given loans with APRs ranging from 0% to more than 25%. As I looked closer, I realized that almost 25% of loans exceeded the recommended 10% of income, and subprime borrowers were hit the hardest, with almost 50% of loans exceeding that threshold. And to make matters worse, underwriting standards were lax, with lenders rarely verifying income and employment. It was like the previous housing bubble all over again, but this time it was the auto loan industry on the brink of collapse. Prices for bonds based on these loans continued to climb, and new subprime auto bonds with junk BB ratings were selling like hotcakes. But as I read on, I couldn't help but feel a sense of impending doom. American Car Center had backed down on a deal backed by subprime loans, citing market conditions. And as more subprime lenders followed in their footsteps, it was only a matter of time before the truth emerged. I closed my laptop, feeling a mix of anger, fear, and sadness. How could the auto loan industry be allowed to spiral out of control like this? And with another financial crisis on the horizon, who would be left to pick up the pieces? The downfall of ACC was the final straw that broke the camel's back, signaling the inevitable collapse of the subprime auto lending industry. It's like watching a repeat of the infamous New Century domino that led to the collapse of subprime housing, only this time it's for cars. Companies like Carvana, who experienced a boom during the pandemic, are now either liquidating or on the verge of doing so. It's no surprise when you consider that the used car auto segment is completely saturated at this point. Investors' irrational behavior is another indication that something is seriously wrong. The lack of care given to auto lending is already alarming, but the amount of investment poured into auto loan-backed securities is truly shocking. With rising delinquencies and defaults, it's only a matter of time before investors realize that they'll never see their stable asset-backed returns. The writing is on the wall, and it's clear that we're headed for another financial crisis. When lenders face the day of reckoning for all of these badlands, shockwaves will ripple through financial markets, and panic will ensue. It's like watching a train wreck in slow motion, and we can't seem to look away. Tesla's CEO predicted that the auto loan crisis would trigger the biggest financial crisis ever, and he may very well be right. As we wait for the next domino to fall, I can't help but feel a sense of dread. It's not just the investors who will suffer when the bubble bursts, but ordinary people who have been lured into taking out car loans they can't afford. We need to take a hard look at the auto lending industry and demand better regulation before it's too late. So, if you're watching this, please consider supporting our work with a thumbs up. And don't forget to subscribe so you don't miss our upcoming videos. We need to raise awareness about this looming crisis before it's too late.